Let us now look at the ledger. When a transaction takes place, the evidence of the transaction is prepared, which are referred to as the source documents. The information in the source document is first recorded in the books of original entry or journal before the transactions are recorded in the ledger book. A ledger book is an accounting book of final entry where transactions of similar nature are summarized in separate accounts in order of dates after being recorded in books of original entry. The ledger is also referred to as the main book of accounts because it is a book where accounts are kept. In the ledger, each account is placed on a separate page. Let us now look at the formatting of the ledger. So we have name of account, then in the first column we have date, in the second column we have details, in the third column we have folio, then we have the debit and the credit. Let us now look at the difference between the ledger and the journal. So the first difference, we have the process of recording transaction in the journal is referred to as journalizing, while recording transaction in the ledger is called posting, since transactions are just transferred from the journal to the ledger account. Then the second difference there, we have after making entries in the journal, they are transferred to the ledger, but entries in the ledger do not go back to the journal, but they go to the trial balance according to the accounting period. Then our third difference, we have the journal is a book of original entry while the ledger is the main book of accounts. Then the fourth difference, we have the ledger is the main book of accounts which doesn't appear in the journal. Then the last difference there, we have the information in the journal is obtained from the source documents while the information in the ledger is obtained from the journal and other sources. Let us now look at the types of accounts kept in the ledger. There are two types of accounts, namely personal accounts and impersonal accounts. Impersonal accounts can further be divided into real accounts and nominal accounts. So these accounts are described as follows. So we have the personal accounts. So what are personal accounts? These are accounts which deals with business transactions carried out with person, firms, and the business. These types of accounts exist in the names of the person and firms. They include accounts of credit customers, which are debtors, and credit suppliers, which are creditors. Then let us now look at impersonal accounts. So impersonal accounts, these are types of accounts that are not personal accounts. Impersonal accounts are made up of real accounts and nominal accounts. So what are real accounts? So real accounts, these are types of accounts in which positions are recorded. These positions are made up of assets of the business. Examples of real accounts are inventory, furniture, buildings, machinery, stock account, cash account, and motor vehicle account. Then for nominal accounts, these are accounts in which expenses, income, and capital are recorded. Remember that real accounts represents assets which are in use over many accounting periods, while nominal accounts represents values which ceases at the close of each accounting period. New expenses and incomes of the same kind will arise again in the next accounting period and then again become extinguished with the close of the respective accounting period. Expenses are cost of running the business during the accounting period. Examples of expenses include purchases, salaries, insurance, electricity, and wages. Income or revenue is money that is earned in the business. Examples of incomes include sales, rent received, interest received, discount received, and so much more. So let us now look at the different types of accounts. So from that diagram we have accounts. So we have two types of accounts, so personal accounts and impersonal accounts. So we have said that impersonal accounts can further be divided into real accounts and nominal accounts. Let us now look at types of ledgers. There are two types of ledgers, namely the general ledger and the substitial ledgers. The substitial ledgers are divided into the sales ledger, purchases ledger, private ledger, and the cash book. So we're going to start with the general ledger. So the general ledger is the main ledger of the business organization, which contains all ledger accounts of the organization. The general ledger comprises of all individual accounts needed to record the assets, liabilities, capital, revenue, expense, and loss transaction of the business. In most cases, Detailed transactions are recorded direct in this general ledger account. To prevent the general ledger from being overcrowded with transactions of the business, the general ledger is restricted to recording control accounts. The subsidiary ledgers are created where individual accounts are recorded, and then the totals of the subsidiary ledgers are transferred to the control accounts in the general ledger. In this case, the general ledger is also known as the book of final entry. Then let us look at the subsidiary ledgers. The subsidiary ledgers are made up of the sales ledger, the purchase ledger, private ledger, and the cash book. So we're going to start with the sales ledger. The sales ledger is also known as debtors ledger or sold ledger. The sales ledger is the subsidiary ledger in which debtors accounts are recorded. A debtor is a credit customer. The sales ledger therefore contains personal accounts of credit customers. Each debtor's account is credited with cash received, discount allowed, and returns inward, since this transaction reduces the amount demanded by the business from the credit customers or debtors. Debtors accounts being assets accounts, they are credited whenever their values reduces. The balances of the credit customer's account shows the amount that the customer owes the business. Therefore, the total of the balances in the ledger is the total amount the business demands from its credit customers. This amount is called trade receivable or accounts receivables. The total of the account balances of debtors accounts in the sales ledger is then recorded in the debtors control account in the general ledger. Let us now look at the purchases ledger. The purchases ledger is also known as the creditors ledger or the bought ledger. The purchases ledger is a subsidiary ledger in which creditors customers are recorded. A credit supplier is referred to as a creditor. The purchases ledger therefore contains personal accounts of credit suppliers. Each creditor's account is credited with purchases, since selling to the business increases amounts demanded by the suppliers or the creditors. Creditors accounts being liabilities accounts are credited whenever they increase. The creditors account are debited when cash paid, discount received, and returns outwards, since the transaction reduced the value of these accounts and being liabilities accounts. They should be debited whenever they reduce. The balance of the creditor supplier's account shows the amount the business owes or must pay the supplier. Therefore, the total of balances in the creditor's ledger is the total amount the business is supposed to pay to or its creditors or credit suppliers. This amount is called the trade payable or accounts payable. The total of the accounts balances of creditors accounts in the purchases ledger is then recorded in creditors control account in the general ledger. Let us now look at the private ledger. This is a subsidiary ledger where secret accounts or confidential accounts of the business are kept. Accounts to be kept secretly vary from one business to another. In general, secret accounts of the business may include accounts such as capital, loans, mortgage, directors' salaries, and so on. Let us now look at cash book as a subsidiary book. The cash book is also considered a ledger since it contains the cash account and the bank account. This is why it is also considered as one of the subsidiary books. Then let us now look at preparation of the sales ledger. When preparing the sales ledger, we simply prepare ledger accounts for each person to whom the business had to sell the goods on credit. The names of the people that buy goods on credit are obtained from the journal. The individuals that buy goods on credit are called the debtors. We transfer the total amount of credit sales in the sales journal to the debtors control account in the general ledger. Let us now look at preparation of the purchases ledger. When preparing the purchases ledger, we simply prepare ledger accounts for each person to whom the business had bought goods from on credit. Individuals that buy goods on credit are called creditors and are obtained from the purchases journal. We transfer the total amount of the credit purchases in the purchases journal to the purchases control account in the general ledger. So this is all that we're going to look at today. Where you have questions, please ask in the group. Those who have not yet joined our online tuitions are up and running, and the price is only 100 kwacha per subject. We provide the following subjects: mathematics, science, biology, and accounts. For further information, you can text me on WhatsApp on 0973023620. I'll meet you next time. Peace and God bless. So this program has been brought to you by Siwale. If you want to get connected with me, you can actually check out my social media platforms. I'll meet you next time, and peace and God bless.